and the meeting is recording. Hi, everyone. We're gonna give a couple of minutes to make sure we have everyone. I think we can get started. Yeah?
Perfect.
Cool. Perfect. So hi, everyone. Welcome, and thank you for joining us. I can see actually some familiar names, so it's good to see some of our existing clients and partners as attendees as well. So to get started, you probably already know some of us, but we have Brendan here, our CEO, and we also have Michael, our head of compliance. And as per the title, we're going to be talking about the tax changes that literally just came up and talk quite a bit about what does that mean for most small companies, for SMEs. We are then going to touch on salary exchange, salary sacrifice, a hot topic on how to reduce those costs, and go from there. A couple of things. We have Michael, who is going to be responsible of the Q&A. So again, if you have any questions, you can type them in on the chat, and afterwards we will try to keep some time for questions. The aim is to stick to the time and keep this to 30 minutes. So we'll try to be short and sweet. So Brendan, if you want to get started on the tax changes, I'm going to be sharing screen, so let me know if I'm missing too much.
Perfect. Thanks, Olga. And thanks, everybody, for coming on. So I'll try and be quick, and hopefully we're quicker than the half an hour by maybe hopefully a few minutes. So yeah, let's get right into it. So very simply, what we wanted to do today was just kind of give you the headlines, really, because we've got a lot of our existing employers on the line and some partners as well. So what we wanted to do is just give you the headlines as we see them and not go into intimate detail, maybe bar salary sacrifice. But obviously the big one and what we've all been seeing in the press was national insurance employer contributions going from 13.8% to 15%. Obviously quite a big deal for pretty much all businesses with employees. And probably, but one thing that's gotten missed maybe slightly in the headlines is the threshold. I think that's actually a bigger deal for business, as it's going to, come in earlier at £5,000. So every single employee earning 5,000 or above will now be subject to national insurance contributions. So that's quite a big deal versus where it was before at 9,100. A couple of the benefits, or if you will, or I guess on the plus side for business, and I think again this has been missed off in the press. The employment allowance, the annual employment allowance, has moved by £5,500 upwards to 10,500. So that's a significant increase, and I guess pretty much everyone's going to see that this month as the first month of the new tax year, where generally a lot of that gets used up. So I think that is a big deal and is very helpful for small business. And then this other one for maybe some of our larger clients, where you have a national insurance bill above 100,000 annually, you are now going to receive that £10,500 allowance. So that's good benefit. There is some other things. I won't get into the detail on these because what we're trying to talk specifically to today is workplace pensions. And when I say workplace pensions and salary exchange, today we're going to cover, the pension related salary exchange. You can, as you probably know, salary sacrifice in other areas that you might have to go and get HMRC approval for, but things like medical, dental, car allowances, cycle to work, all those things can be salary sacrificed, and some require HMRC approvals. But we're talking about pensions specifically, and also, which maybe sometimes gets missed off, as we're very specific about workplace pensions, and generally since auto enrollment, defined contribution schemes. There are some implications for defined benefit schemes, which we won't cover today. So if you have a defined benefit scheme, you need to look at that differently to a defined contribution scheme when it comes to salary sacrifice or salary exchange. And just worth noting that, I think, before we kind of get into more detail. So I think onto the next slide. What we tried to do is bring this to life for you guys as employers, where what does this truly mean to you? And, as you can see here, it's pretty significant in terms of an increase in cost. So we spoke there about the 15%. So what that means for an employer, we made up Husky Limited, although we have Husky Limited as a company, it doesn't currently have employees. But taking a company that does have 10 employees on pretty much the UK average salary of £35,000, what this increase means effectively for your business is your national insurance contributions will increase by this £9,258. So pretty significant increase that I think a lot of employers need to be aware of if they're not already. So that is obviously coming into play this month. So, be aware of that. And yeah, here, I think over to Olga to tell you how actually you can bring down that number.
Exactly. So the question was, did you know that there's a way to offset all these costs that Brandon was talking about? Of course, the NI, but also, it's the increase of minimum wage, this increase in statutory pay, etc., without having to cut resources or benefits. Well, we kind of have already told you the answer previously, but that is salary exchange or salary sacrifice for pensions. You probably have heard a lot of definitions of it, but basically it's just a different way of contributing into pensions. And what happens is that the pension contribution amount is deducted from the worker's gross pay and sent to the pension provider straight as an employer contribution. What that actually means is that, therefore, the national insurance for both the employer and the employee is much lower, and the employee also gets the tax relief immediately. Actually, for them, it means more take home for employees, and of course, all these savings we were talking about for the employers. A couple of points we wanted to make, as you can see on the slide, is that you can keep your existing pension provider, you can keep your existing payroll process, you can just implement salary exchange or salary sacrifice on top of that. So that's sometimes a bit of a misconception on this topic. I thought I will give you a couple of examples. Again, you might be like me and I like to see the numbers on screen to understand how things work. And here we have the example that Brandon was talking about previously, someone on £35,000, so someone on average salary in the UK. As you can see from the slides, from the numbers, the employee and I, if they go from doing that 5% contribution with and without salary sacrifice, is of £140. And that's the extra that they're going to get in their net pay. As an employer, you can see as well that your employer year NI bill will also be reduced by that amount. And as we said earlier, this is just for one employee. If you're talking about your whole workforce, the numbers are, of course, much higher. Here, I also thought I will show you the other side. So an example of someone on actually £125,000 salary. I'm sure a lot of you will know why this number. This is because of the personal allowance. So as you might know, the personal allowance, meaning the amount of money that you don't pay tax on, goes down by £1 for every £2 that the gross income goes up by 100,000. So these are examples of employees that will benefit quite a bit on that tax relief getting immediately, and of course the employer and employee and I. So if we look at that example, that person will lose, let's say, their allowance if they were keeping the £125,000. But if they are changing, if they put it into the pension, they will keep that allowance, meaning that they get around £8,000 more on their net pay that they don't have to pay on tax. And for an employer, that's a big saving as well, because it's around 3,700. So it makes quite a difference. And I guess then we talk about the benefits, we talk how it can help employers reduce their costs. So I guess the question is, why not everyone does it? Brendan, you want to tell us your thoughts on that?
Yeah, I mean,
as
for
well?
me, so many of our, kind of clients and potential clients ask us why, what this is all about. And for me, I guess sort of 20 plus years in financial services, at least, I don't even want to think about it. But I think typical of financial services, it's the jargon and the language that is used that is it sort of complicates matters, and words like sacrifice or exchange sound quite negative. And I think people, as a result of that, look at it and go, okay, well, that doesn't sound good, and I won't do it. Instead of, as someone said to me recently, will we not just call that salary bonus? Because there's really very few reasons why you don't do this on a qualifying earning schemes that you're making contributions into. So I think for me, that's one of the main reasons people don't do it. There are obviously more detailed reasons. And Olga, being more detailed than I, you might maybe cover those off. But for me, it's definitely it's words that confuse people.
Yeah, exactly. Awareness as well is one of those. It's like a lot of the large caps, big companies, they have a big HR team and advisors, so they do it. But we find that a lot of SMEs are not even aware that this is a benefit. And then, as you can see on the screen, there's the extra administration. There's the changes on the contracts of employment that you need to do, or do it through site letters. There's also the education piece. It's usually hard to find good communication materials, even calculators for employees to understand the benefits and see what you're offering them as well. And there is the additional compliance, which is an important point I wanted to make, especially minimum wage. So again, no one can go below minimum wage after having a change or sacrifice their salary. So this is very important and needs to be checked. There is, of course, the auto-enrollment minimums. Even if you're on salary sacrifice, those need to be kept. And then there's other things like statutory pay. When you upload to the pension provider, it needs to go as an employer contribution. So there's a lot of other compliance checks that you need to look at. So that's why sometimes small companies wouldn't do it. The last point that Brendan touched on is qualifying earnings. Again, is one of those common misconceptions as well, that a lot of softwares do calculate salary sacrifice on the full basic pay. So is this conception that you cannot do it other way? Well, you can. So there's the option also to do it on any other earnings basis. So that shouldn't restrict you as an employer. And then I was going to touch on as well on how we do it in Husky. Again, there's quite a lot of clients already on the call, so you might already know, you might already have salary sacrifice implemented. But as you know, the way we do it is on an opt-in basis, trying to be no contract changes, no chasing, so employees can just request it themselves directly through the Husky app, which I'm going to try to show you in this quick video here as well. Basically, this is the Husky app. So the main point is, as an employee, they will see, if they don't do anything else but just apply for salary sacrifice, this is how much extra they're going to get on their net pay. They can see that straight away. They can see the calculation, and they can even change the contributions. Again, as we talked before, for that worker on 125K, they can actually make it an amount or change the percentage to make the most of a tax efficient way to do it. The good point is there's no changes to the contracts. We just do everything through a side letter that employees will basically just sign through the app straight away. So that's it. Applied, sign, and you keep moving. As an employer, you will then have this portal, this banner where you can actually track in real time how many of your workers have applied for it, how much are you saving, how much your employees are saving, etc. And if you are an existing client, actually on that button here where it says offer salary exchange to your employees, you can set this up yourself as well. And our team are here to help, of course. From the employer perspective, you will just need to approve the agreement. As I mentioned earlier, our system does check if we think you go below minimum wage, it doesn't allow you to go below the minimums of auto enrollment, and our compliance check does do all the checks on a monthly basis as well. So you don't have to worry about that. And we keep an audit trail, of course, of everything. You keep copies of all the site letters every time there's a change. And as you know, you need to keep 6 years of the legal required communication. So that's all done then on the software and on the tool straight away from here. We have some partners on the call. So as you know, we also let payroll know on a monthly basis of any changes that need to be done. So that's kind of it. That's the whole process done. So as we say, you can just upload to Husky instead of uploading to the scheme, and it gets done. A lot of you might know Michael already, so if you need help, the team is here to help as well. And afterwards, we're also going to send you a couple of links. So if you're an existing client, you know how to set it up. And if you're not, we of course look forward to get it started. Before I give the floor to Brendan to do a bit of the conclusions, I also wanted to talk about reinvesting in your team. Again, we focus this a lot on the employer saving, the cutting of the costs, but there's also this concept, you have a great team, so you can reinvest on them as well. The first way to do it is on the NI reinvestment. Again, we talked about all the savings that you can make on the employer NI. You as an employer have the option to actually reinvest some or even all of them back into your employee's pension pot. So again, you might not be able to do salary increases, but you can reinvest 50% on the savings and give them a little bit more. The automation and the flexibility, especially for high earners, giving them that option to go in, calculate the tax savings, increase the percentages, it makes a big deal as well. Review your pension scheme. Our existing clients probably already know you have access to the comparator tool at any time. So you can always go and check if the pension provider that you have still aligns with, your goals and is the best option for you and your employees. And the last point, we are kind of starting a bit of a trial on a savings account. Brendan, if you want to talk about that as well, in case anyone is interested.
Yeah, thanks, Olga. This is a really exciting area for me. The whole area of workplace savings is like lots of brilliant research done by Nets Insights around this area, and the successes that it's having for helping mass market people to save, where we're at a kind of effectively a savings crisis in the UK. So what we're doing is effectively when you implement salary sacrifice as an individual, it creates this little slice of extra net pay. And instead of that net pay flowing to your bank account or your paycheck, as it would normally, as it does today, that slice goes into a separate savings account. And we're undertaking this sort of project with a UK credit union called Transave. And the idea being that over the year, you can build up this emergency savings buffer. There's lots of research on it that I can happily share, but basically what it shows over time is that your resilience, financial resilience, and kind of well-being is hugely increased, and then also you have this money and this extra cash as well, and you can then consider making extra pension contributions as well and getting the tax benefits from those. So we think it's a hugely exciting project because of this found money element. So the extra bit created by salary exchanging and reducing your tax bill. So anyone who's interested, please let us know. We're just going through trialing it with a few sort of like-minded employers who want to do this for their staff. I can also share the research that's been done with some very large businesses like Suez Waste Management, Boots, They've done really successful trials with employees and how they've helped them build the savings pot over time. And yeah, as we see this as very much part of the Husky journey and service. So it's not going to be at any extra cost. It's just a bit like our investment from a technology perspective into salary sacrifice, making that efficient and easy, and at the same cost to doing all the pension compliance and so on. So just let us know. We'd love you to be involved. We don't want too many people initially, so not everybody, but we were excited to kind of get people going on this. We do it for the team internally. Sorry, I can see Olga's moving me along, which is dead right. So take us back to that employer we covered initially with the 10 employees, all on 35k, investing into pensions as individuals. If you are to implement salary sacrifice on the team and the team take it up, and again, Olga mentioned this is on an opt-in basis, so it's up to the employee whether they do it or they don't do it. But assuming they do it, we can look at that cost. So we talked about that 9258 of increase to the business. And obviously we talked about that increase in allowance as well. So that 5,500 therefore reduces the business cost. So again, a lot of the headlines in the press showing these big numbers. Actually, there's quite a bit of cost reduction here for the employer built in for, I guess, the very small employers. Obviously, with anyone with large headcounts, your costs are going up very significantly more than these slides are showing. We're then, if we calculate those employer savings, national insurance savings, as the employees opt into salary sacrifice, that therefore increases the savings on this cost of £2,625. So ultimately, I guess your cost as a business for these 10 employees has only gone up 1,133 versus the headline sort of 9,258 that's kind of been shown. So this is the right time. I think we're kind of very, very conscious that, albeit April's interesting because obviously the new tax year, you've got this new employer allowance of 10,500, which will soak up a lot of this increase in the month. But once that gets used up, you're going to see this very significant cost come into your monthly payroll bill. So from May, I think there's going to be a real significant increase. So looking at ways to mitigate that, we think this is a really often missed opportunity for employers to mitigate that cost. So Olga, I think.
Yeah,
so that why now? Well, sorry, I've jumped into there. So yeah, why now is the 15% increase, but plus the threshold being brought down. I think there are other reasons. Olga, I don't know if you want to cover those as well.
Exactly. Yeah, and even before, right? That was on 10 workers and 35k. We added just that worker on 125 that we talked about. That's already 3,700 more that we haven't even considered, right, on those numbers. So it's
and also I guess ultimately
their
pension contribution, we didn't touch on how massively increased that has been by salary sacrifice. But obviously there are business owners here who will be on business and higher paid individuals. It's really well worth looking at, especially at any of the thresholds or tax thresholds. So your 50,271, you're going to go to 40%. And then obviously this 45% at 125, 140. So looking at those thresholds, really important. Looking at childcare allowance as well is another area is well worth looking at as the individual. But we were trying to focus, I guess, on employers for this goal.
Yeah, exactly. And I guess just to finish with the message of the whole webinar is, act now, do it now, and why. So the main point is, of course, the rising employer costs, especially on the national insurance. But again, there's also some other costs that are going to go up. And there's also a bit more for the employee as well. So yes, why now is because of the employer, but employees are also, in a tricky economy. So it's a good extra benefit that they will get more on their net pay. Also for good talent, for example, employees are expecting a lot more. And it's worth staying competitive because workplace benefits are becoming more and more important to keep and retain your talent. So of course, it's always good to stay ahead. Conscious we only have 5 minutes. So again, I think we are done. Thank you very much for listening to us. And now we're gonna go to Michael, who is gonna have a look. I didn't check if there
Yes.
were any questions, but go for it.
Glenn has foreseen the coming end of the presentation and nipped in with a question. Salary exchange, can the employee exit any time after signing up? We've worked with our documentation to keep it in line with the HMRC guidelines, and employment lawyers have helped us draft all our documentation. The recommendation that is that the worker can exit salary exchange at any point due to circumstances, but the company would have a holding period of I think it's up to 6 months, Olga, before they can reapply to go back into salary exchange. Exiting the salary exchange won't exit them from the pension scheme, and it will revert back to the standardized deductions from their salary. But yes, we also have the option inside our software that a worker can amend their contribution via the app. So making an application, as Brendan and Olga mentioned, that it's an opt-in to salary exchange, but you can also amend, say, at the end of the year if you're getting a pay increase, or anything where your lifestyle may change. You can obviously amend your agreement with the company, and our software helps to do that.
Yeah, the only thing I'd add
Exactly.
there is one thing to be aware of is parental leave. I think it's an important point that actually you wouldn't or you can't really exit during that period because you reduce your benefit as the person on parental leave. So it's one to be aware of. It's probably one of the very few negatives to salary sacrifice in that you have to continue with the benefits that are given to any employee on parental leave. So it's one to be aware of, but obviously the benefits on the flip side so outweigh that one position that we see that mitigated, but it is one to be aware of.
Any other questions?
Before we go, I might just mention that typically when we talk to companies, there's some common things that come up. Most common one would be from employees going to the employer saying, "What happens if I have loan applications? I have to present my salary to the financial institution." Typically, the financial institution will look for something from the company anyway to confirm the salary. It's at that point the company can confirm that the nominal gross pay is X, the worker is on a salary exchange of Y, and that would be cover that. But that's probably the most common question that workers ask their employers as to what happens in those situations. And I think Brendan mentioned as well, and also it's Olga mentioned the other considerations. Anyone applying, it's a key one. They can't apply for an exchange below the national minimum wage, so you have to still be paying them above the national minimum wage. And the key takeaway, it is a contractual arrangement to affect the employment contract. So you are basically having a worker reduce their gross pay by agreement in lieu of a benefit to the pension.
Quickly, Michael, I'll deal with Louise Buckland. So hi, Louise. Yeah, this is a really good question because it is so counterintuitive. It sounds bad. It is good. So what we say is, one, from an employer perspective, it's really important is communications to employees. We obviously help with that. We supply a lot. We give videos and so on. But Olga showed in the demo there the dashboard, so you can track it and you can see it. And you can really see the benefits. But to the individual, what we say is, and the research we did very originally for this was in-app, seeing the pounds and pence. So, what you see straight away when you download our app as an employee, where your employer has taken Husky, you can see your pension contribution. And what we're saying is, do nothing except exchange that for an employer one. This is the benefit. So the pounds and pence really help demonstrate how this works and what happens if you do it. So we find that's one of the best ways, but definitely employer communicating various messages, and that can be as simple as, after you implement salary sacrifice, telling your employees, we've implemented this, we see you didn't take it up. Is there any reason why? And again, we're very happy to support that sort of Q&A with the answers. And yeah, it's often as simple as just understanding that your net pay will go up by £30 or £50 a month or whatever it might be, depending on what you paid. So we would certainly be encouraging people to go to the app and have a look. Sorry, Olga, I can see you laughing at me.
No. So I know it's 12:30, so I know it's time to finish the webinar. Cliff asked a question about, yeah, perfect. I was going to say Michael can set that, make sure you have that set up. Perfect. So thank you everyone for joining us. And as we said, we're going to send a follow-up. We're going to send a recording for anyone who couldn't make the whole the whole half an hour, and also the steps if you are an existing client on how to set it up, or for anyone that's not, on how you can get started. So again, thank you very much. Enjoy the very sunny Friday and weekend. Bye, everyone.